Hi friends, welcome to my channel. Friends, if you are someone who wanted to become a successful trader, or if you are someone who lost a lot of money and now you are looking for a solution how to become a successful trader, or if you are new to the market and want to start a career in trading, this video is for you. Today, I'm going to take a detailed video how you can become a successful trader using a Nifty strategy. So before going in detail, I want to give you a disclaimer. This video is just for an educational purpose and I don't guarantee you any success or any profit from this strategy. So before entering into a market, you make sure you do your own studies and in-depth analysis, then enter into the market, right? Now, let us see what is the strategy is all about. So here I'm going to take you from the basic and into the detailed one, right? So I'm sure that if you strictly follow this, it will help you to become a successful trader, right? Yeah. So these are all based on my studies and my experience. I have concluded with this, and that's what I am going to share you in this video. Now, let me share my presentation. A proven Nifty strategy for consistent stock market return. That's what we are going to discuss today, right? So in this, as I mentioned, this is not a holy grail. This strategy is for the people who are looking for a consistent return from stock market, from a day trading. And see, on an average, what I found was around 3.5% kind of return this strategy is generating, right? But that doesn't mean that I am guaranteeing you something. It doesn't have any guarantee. Stock market returns are always carries a risk also. So there is a risk also involved in this, right? But you need to manage it properly. Now let us see what is all the strategies about. So in this presentation, this will be slightly lengthy presentation. So I will show you what are the things I am going to present in today's video. Number one, so these are things which I am going to show you. One, I am going to teach you what is a trading psychology. Then I am going to teach you what is money management rules, and I am going to show you the strategies. Right. So all these three things are going to discuss in this video. Friends, to become a successful trader, there are three important steps, right? Three important parts. One is the trading psychology, right? Normally, I say which carries the most, highest weightage in or among three, where more than 60% weightage goes to trading psychology, right? So I will show you basically what are the things you need to take care in the trading psychology. Then comes to the money management, right, which carries around 20% weightage. Then comes to the strategies, right, which also carries around 20% weightage. That's how you can become a successful trader. Most of the people, they only jump into technical analysis and making strategies to become a successful trader, but only by doing your analysis or only by getting into technical analysis or any other strategy building, you're not going to make any successful trading. 1 or 2 days you may win, but on a consistent basis, you will not be able to do. So first thing is you need to have the right foundation, which is trading psychology. Then you need to know how to manage your money properly, right? How to do the money management. Then we can actually get into strategy. So I'll be taking all these things in today's video. So I want all you to listen very carefully. Make sure you keep a note and pen with you so that you can take all these important notes before implementing in your trading life, right? Now, what is a trading psychology, right? So trading psychology, what are the things you need to understand is one, trading psychology carries the most or highest weightage among all these three important points, right? As I mentioned, around 60% weightage goes to trading psychology. Then next one, first thing, what you need to program in your mind, or you need to believe in your mind, or you need to tell your mind that this is how it is. You don't have to trade every day. To become a successful trader, understand that you don't have to trade every day. So if you have a tendency to trade each and every time or each and every moment or each and every day, that means you need to work on that, right? First, make sure that you understand that you don't have to trade every day. When you get the right opportunity, that time only you need to trade it, right? So always come out of that casino mindset, right? And it is a probability game. Trading is a probability game. So you cannot be 100% right in the market. See, in human, it's a human being tendency. that whatever I say should be right, whatever my opinion should be right. Right? That's a we all are programmed, right? So in stock market, don't come with that mindset. That since I predicted this, it has to go up, or since I predicted this, it has to come down. No, you cannot be 100% perfect in the market. So we have to work with the probability, right? So normally we say probability is a 50-50%, right? So always understand that trading is a probability game, and we are in a game of probability. We are in a business of probability, right? With that, we need to manage it. Then you need to understand, don't expect a impossible returns, right? People, even most of the time, I've seen many people who comes to me and ask, see, we have an algo trading platform called AlgoOver. You can visit my website, algoover.com. So people come to my website and ask, DINOJ, can you provide me, I'll put a 1 lakh rupees, and can you provide me 20-30,000 rupees every month? Do you think if I can generate those kind of return every month, will I give those strategies to other people? I can borrow n number of money and I can generate those kind of return and take those money, right? So always understand that market is not here to give you an unexpected or an impossible return. Always understand that it can generate a reasonable return, right? So let us say if you are someone who is investing in mutual fund, normally we say 12-15% kind of return what mutual fund generate. And if you are someone who is directly into equity, 20-25% return what it generates you. If you are into trading and if you are a profitable trader, normally 36-48% kind of return what you will be generating on a year, right? So 3% is what a reasonable return, what you can actually expect, 3-4% return from a trading, right? So don't come into a trading business expecting, expecting an impossible, which is not possible at all in the market, right? 1 month you would have generated, but every month it's not possible, right? And there are people, who have been cheated with many other organizations promising a higher return, like every month you put 1 lakh rupees, every month I will double it, or I'll give you 50% return, 30% return, and all. And many people had the bad experience, right? So always when you enter into market, understand that this is a business, this is how it works, right? Now, next, first always create an emotional balance. See, when most of the time, when we meet a loss, what happens? We get disappointed, we get frustrated, right? We started blaming brokers, we started blaming the market, we started blaming the economy. So all these things normally happen, right? But emotional balance is the most important. At the same time, when we make profit, what happens? We become more confident, right? Oh, okay, this time I made a profit. And now I have a strategy which will consistently give me a profit, and you will be overconfident. And you, like previously, if you would have taken 1 lot or 2 lakh, you will double next time, right? Because that's a problem with the emotional balance. When you make profit, you will be more happy, and when you make losses, when you meet with losses, you actually get frustrated and disappointed, right? It should not happen in that way. You understand that this business is a probability business, and outcome of this business is uncertain. There is no certainty. What can be the outcome? It can be profit or it can be loss, right? So you are in a business of uncertainty outcome. Because of that, always understand that we need to balance our emotions, right? Some months you may have a negative return, some months you will have very good positive return. All these things should be kept in the mind, right? So you should actually work on your emotional balance. Then you are in a business of uncertain outcome, which already I said to you, right? So understand that this business is an uncertain outcome what we are going to get. So we don't know what's going to happen, right? We know this is an opportunity. I am investing that money in that trading, right? And after closing the portion, you may be end up in loss or you may be end up in profit. So its outcome is uncertain, right? Then loss is a cost of operation. Consider the loss, whatever you are making from the trading, is a cost of operation. For doing every business, you take any business, there is a cost of operation, right? If you are into some manufacturing, you have employment cost, you have resource cost, all those things. Or you are in a service sector, you will have your employee cost, the building cost, right? All those things. So for every business, there is a cost of operation. So when you meet a loss, when you make a loss in the stock market, understand that this was my cost of operation. This is a part of the game. And only thing you need to understand that how to manage that loss. It should not be in such a way that my capital is 10 lakh and in a single trade or in a week trade, I lost all my 5 lakh capital. It should not happen like that. So you should know how to manage it properly. So there should be a limit for the risk. So that loss should be considered as cost of my operation, right? There. So these are the things which we need to take care in the trading psychology. Once you are thorough with this, that means 60% of your programming or the part of the winning trades are over. Now you need to work with the money management rules, right? What is the money management rule? We need to understand. Now, first thing you should know and understand how much capital I need to invest in this business. I have, let us say, only 10 lakh in my bank account. And should I put a 10 lakh or should I borrow another 10 lakh and make it 20 lakh and invest in that? Or should I keep only 5 lakh, balance 5 lakh, I will keep it for my other survival purpose. Only 5 lakh I will keep it for this business. That you need to think about and do it, right? So always understand that since this business carries a risk, all the business carries a risk, this business also carries a risk. You need to understand, you need to have that mindset, how much capital we need to invest in this, right? And next, how much capital allocation I should do in single trade. Let us say I have a couple of strategies. I have, let us say, 4 strategies and my capital is 10 lakh. Should I invest entire 10 lakh in first strategy or should I diversify into 4 strategies? Or how much capital I should invest in each strategy? We should have a clear idea, right? Then, what is the risk to reward ratio? I should manage it. What is the risk reward ratio? Which is a very important part in a game. See, normally, most of the people, see, there is a SEBI study saying that 90% of the people lose their 90% of their wealth in 90 days, right? So when you open your broker's trading terminal, you get a pop-up stating that you are aware that 9 out of 10 traders are losers in the market, right? So most of the traders, what I found was they enter into a market with a gambling mindset, right? So you know what is gambling mindset, right? When you enter into a casino, in casino, most of the time, or always, not most of the time, always, the owner, the business owner, the owner of the casino make money, not the player, right? Player will make 1 or 2 times, which will tempt them to again continue the game. And they put money, they keep on put money, and they keep on lose, and the owner of the casino always earn money. How do they earn money? Because the casino board is designed in such a way that the owner has an extra edge. That is why they are always having a winning probability, right? So when we enter into a trading, we should not enter into with the gambling mindset. Instead of that, we should enter into with that businessman's mindset. Where do I have an extra edge in the strategy? If I have an extra edge, then I should enter into the trade. So let me show you how you should work on the edge. Okay, let me open an Excel. What do I mean by an extra edge, or what do I mean by a risk to reward ratio, right? Yeah. Hope you are able to see my Excel, right? Now, 2 things what we need to understand. One, since it's a probability game, if I have a higher probability strategy, where the strategy itself is performing 70 or 60 to 70% of the time, if it's success, if it has a success ratio 60-70%, even let us say every 1 rupee raise, if I take a 1 rupee reward, still end of the month I will be making money, right? For example, let us say every time when I am losing, I am ready to lose 1,500, and every time when I am winning, I want to win 1,500, right? And we have how many trading days? We have to average 20 trading days in a month. Hope you are able to follow me. See what I am telling. See, we are looking for a probability of 60 or 70%, right? We have a strategy which is proven that which has a higher probability of 60% or 70%. So in this case, if I maintain a 1:1 risk to reward ratio, 1:1 risk to reward ratio, that means every 1,500 rupees loss, I am ready to gain 1,500 rupees profit also. So on an average, in a month, we have 20 trading days. That means out of 20 trading days, 60% of the time I am winning. That means 60% of 20 is nothing but it is 12 trades, right? Balance 8 trades, I will be losing, right? That means I will be gaining around 18,000 rupees and I will be losing 12,000 rupees. Net, still I will be gaining around 6,000 rupees because this strategy has a higher probability, right? I am telling I have some strategy which has a 60% probability. So even with the 1:1 risk to reward ratio, I can actually win in the market, right? So here my edge is what? My probability, higher probability, right? Another way, let us say I have a 50-50 winning ratio, right? I have 50% winning ratio. In that case, if I maintain with the same 1:1 risk to reward ratio, it will not work. So what should I do? Let me show you another one. So I told it's a probability game, right? Trading is a probability game. Now, let us say I am taking 1,500 rupees risk in every trade, and I am going to I am focusing minimum at 3,000 rupees profit in a trade. Just a simple example I am taking. So when I am ready to lose, I am ready to lose 1,500. When I am gaining, I want a 3,000 rupees profit, right? And here, as I mentioned, we have 20 trading days. That means let us see a probability. That means 10 days I am ready to lose, 10 days I am ready to win. In that case, what is going to happen is 10 days I will lose around 15,000 and 10 days winning I will be gaining around 3,000 rupees. Net I will be gaining around 15,000 rupees. I am talking about 50-50 probability, right? Now let me show you another one, another probability where I am telling I have only 40% probability of winning. That means 40% of 20 is what? 40% of 20 is 8 days, right? 8 days I am winning, balance 12 days I am losing. Still, end of the month, I am actually gaining some profit. I'm talking about the winning ratio 40%, right? So, in order to make money, what I want to say is you don't have to be 60% or 70% right in the market. Even with a 40% right in the market, you can become successful in trading, right? So this is what the importance of the risk to reward ratio. Here what I did is I did a 1:2 risk to reward ratio, right? That is why we are able to generate a profit of 6,000 even with a 40% strike rate, right? Hope you're clear with that. In that case, we can continue with our money management rule. Now, risk to reward ratio. So we need to understand what is the risk to reward ratio we are maintaining. Then risk in a single trade. What's the kind of percentage of risk I am taking in my single trade? Then I should know risk in a day. So how many maximum number of trades I will be doing in a day and what is the maximum risk I am going to do. For example, I have a 10 lakh capital and if my risk in a day goes to 3 lakh, that means 30% of my capital is what I am risking in this trade, right? Which is actually a highly risky business, which you are not supposed to run the business at. Right? So we should have a clear idea what is the risk which I am going to take in a day. Then what is the total risk in the strategy? For example, I created a strategy and in this strategy, I found that, okay, I invested at 10 lakh rupees. Should I wait at least up to 50% of my capital erode to stop the strategy? No, you should not be doing that. Right? So you should have a clear idea how much is the total risk in the strategy. For example, if 10 lakh I have invested, if at all 2 lakhs comes down, right? That's 20% of my capital comes down. That's the time I should stop my business, right? I should have a clear idea about that. So these are the money management rules we need to follow. Now, let us talk about strategy. Now, we learned about trading psychology. We learned about money management rule. If you are very clear about all these, then go with the following another whatever we are discussing. Otherwise, again, go back and learn what we taught in this video, right? Then come back to this portion. Now, the last portion is the strategy. The main important part is the strategy, right? So this strategy, let us first understand what is setup. Now, the capital, according to my analysis, the strategy what I'm going to teach you, according to me, 2.5 lakh is the minimum capital required, right? We are doing it in Nifty future. So since we are doing it Nifty future required around 2.2, 2.3 lakh capital. Balance amount which we are actually keeping it to meet the M2 amount, right? And instrument we are using Nifty future. Then the candle, the analysis part, we are using 5-minute candle, right? And purely it's an intraday trade. We don't carry forward this position at all. And risk to reward ratio is every trade. Okay, we create a setup, and if it's success, we are looking for 60 rupees movement in at minimum. And if it is risk, 30 rupees risk what we are going to take. That means every trade 1,500 is the risk and 3,000 is the reward we are looking, right? Now, risk in a single trade will not go more than 0.6%. In a simple way, see, we all know that the capital is 2.5 lakh, and 2.5 lakh 0.6% is nothing but 1,600, 1,500 rupees, right? Now, let me clear this. Okay. Now, risk in a day will not go more than 1.2%. That means risk in a single day will not go more than 3,000 rupees, right? So 0.6% is 1,500, 1.2% is 3,000 rupees, right? That means I am limiting my trading with only 2 trades in a day. So maximum trade is 2 trades in a day, right? And total risk in the strategy is 20% of your capital. Right? If at all this strategy is not working, any moment, let us say your 2 lakh became 2.5 lakh became 2 lakh, that's the moment you should stop your trading. This strategy is going to stop it, right? You should find out some other strategy in case if it not working, right? But historically, when I checked, it is working. It never came to this kind of level, right? So these are the rules which we need to first set up in do a setup in our strategy. Make sure you understood capital 2.5 lakh, Nifty future what we are trading, 5-minute candle what we are going to look. It's a purely intraday trading, and it's a risk in a single trade is only limited up to 0.6%. I don't know how many of you are actually having this kind of this one, right? 1 minute. Let me just clear all drawing here. Now, then risk in a single trade 0.6%, risk in a day is maximum 1.2%. That means we are limiting the trade with only 2 trades in a day. Risk in the strategy is 20%. Maximum risk in the strategy is 20%, right? Okay. Now, let us see what is a rule. Rule number 1. Okay, let me reduce this. Yeah. Number 1. The trade starts only after completing the first 5-minute candle. For example, let me. So now let us say the market opens. Now the time is 9:15, right? So we will just wait for the first 5-minute candle to close, right? Immediately after the strategy start working. So first 5-minute candle we will not do any trades, right? So 9:20 onwards, what we are actually going to do it. Then, so rule number 2, avoid if it an upside gap or downside gap. For example, I will show you. Hope you know what is a upside or downside gap, right? The previous day the market was like this, right? And next day, if market opens here, the first candle opens here, that means the candle is much away from the previous day's high, right? Somewhere here is a previous day's high. If it above high or open below this level, below the low, previous day's low level, which is called upside gap or downside gap, right? So the price of the particular day, the price is trading away from previous day's high or low, right? It's not touched the previous day's high or low. That means it's a upside or downside gap. Those days, this strategy will not work. So we need to avoid this strategy, right? Then, next rule is avoid half-day trading. Whenever NSE has a special day trading on Saturdays or on Diwali days, all those half-day trading days, make sure you don't use this strategy. It will not work, right? Then, maximum 2 trades in a day, which I already mentioned. Second trade should be opposite of the first trade. For example, when you set up all this rule, okay, first you got a buy signal, okay, and you executed either the stop loss or the target reached, and you exited the position. Second time again the system generated a signal. If the system generated a sell signal, then you can enter it, right? But if the system generates the same buy signal, then you should not enter. Hope you understood. If the second trade of the day is opposite of the first trade, then you can enter it. Otherwise, you should not enter it. If first trade is buy, second trade should be sell. If first trade is sell, second trade should be buy. Then only you should enter it. Then don't think every day you have to trade, right? So as I mentioned in the psychology part, understand that you don't have to trade every day to become a successful trader. You need to trade only when there is a right opportunity for you. That's a skill, right? Then exit trade by 320, irrespective of whether the price reached your target or stop loss, whatever it may be, by 320 you should exit it. In case if position is open, you should exit it, because this strategy is purely for intraday. Then no fresh trades after 3 p.m. For example, morning you got your first buy signal, and after 3 o'clock, in between you book the profit or loss, but after 3 o'clock you got a sell signal. You should not enter into that. Or morning to till 3 o'clock, you are not got any signal. Market was just a sideways. It was not generating any signal. And 3 o'clock, after 3, if it generated buy or sell signal, you should not take it. After 3, we don't enter into the penny position, right? So these are the rules. Now let us see the action, right? So once you're clear with the rules, what is the action? Action is very simple, very, very simple. Anyone can actually use, use this and take trades in the market. Buy. When should you buy it? First, find out previous day's high. Okay, previous day's high. Then previous day's high. Let us say previous day's high is 22,520. You should buy at 22,530. Right, 530. That means whenever it breaks previous day's high and generate another 10 rupees upside, then only you should do it. Hope you understood, right? I'll show you one more time how you should do it. For example, previous day was something like this, and next day the market opened and it was trading here, and it broke. Right, the previous day's high is broke, plus another 10 rupee upside traded. Then you should buy it. For this, what you need to normally do is after 920, you can actually keep a stop loss buy order, right? Stop loss buy order, right? At previous day high plus 10 rupee higher side, you can keep a stop loss buy order, right? And then what should be my target? My target is buy price plus 60 rupees. That means if my buy price previous days, for example, my previous days high was 22,520, my buy price will be 22,530, right? 10 rupee upside, correct? And my target will be 22,590. Right? So 60 rupees is what we are focusing. 60 rupees is nothing but 60 into 50 is the lot size, 3,000 rupees what we are focusing, right? And stop loss is half of this, 30 rupees, right? So in this case, 22,500 will be your stop loss, right? 1,500 rupees is a risk, right? Well, I'll show you. Yeah. So stop loss is buy price minus 30 is your stop loss. Clear? So this is how the buy should execute. Same way sell is what previous day's low minus 10. If previous day's low is, for example, you had a market like this and it made a low, then it went like this, closed like this, right? And next day, if the market opens somewhere here, and if it breaks previous day's low, right, minus 10 rupee, right, that moment you can sell it. And you same way you can look for a 60 rupees downside target, 60 rupees downside target, and upside the stop loss 30 rupees upside stop loss. Sell price plus 30 rupees is a stop loss. So 1:2 risk to reward ratio, right? I will show you that. Now my yes, target is sell price minus 60 rupees and stop loss is sell price plus 30 rupees, right? Here also what you can do is after 920 candle closes, right, then you can keep a stop loss sell order, right? So only thing you need to understand, if the 920 candle shows that it's an upside gap or downside gap, then don't need to put any orders, just leave the day like that. You don't have any trading opportunity. But if the price is trading within yesterday's either near to closing or within the high and low range, then you put a stop loss buy order and stop loss sell order. So any one execute, the other one you cancel and put your target and stop loss price, right? This is what the action you need to take it. Now it's very simple for me to say this, but you want a proof how it's working, right? So I'm going to show you how I actually derived this strategy first, right? Let us do some studies with the data. Let me stop this. Let me open the data. I have, yeah. Okay. Now, sorry, I think it's not coming. Let me one more time. Let me open the data. Yeah. It's not coming. Let me just do one thing. Let me close some of the screens so that it will properly allow me to share it. Yeah, I hope it's visible now, right? Yeah. Since there were a lot of multiple windows open, it was not allowing me to share. Now you can see in my screen, I have date, open, high, low, close. We don't have to do anything with open and high, just I took it from another system. So this data is there from 2011 to 2024, right? So this many years data I have, open, high, low, close. Now, what I want to understand, what I am telling is that, see, my trading opportunities all based on previous day's high. So on 7th, my opportunity is based on 6th high and low, right? On 6th, if you see, there was the previous day's high was 22,605 and low was 22,302, right? Now let me see whether I had a buy opportunity or not. So whether buy is triggered or not. How to find out? Let me, so we just find out like this, if the high is what? High of today, that's 7th trade, 7th March I'm talking, right? 7th March of high is greater than previous day's high, that is 6th high, right? Plus 10, right? If that condition is valid, then what I want the to give me a message, it's a buy, right? If not, I want a message to give me no trade, right? No buy, right? This is what I want to do it, right? So 7th I had a buy signal, and 6th I had a buy signal, 5th I had a no buy signal, 4th I had no buy signal. Let me take up to this day, right? So you can see lot of out of how many we have around 3,269 trading days data, right? Out of these, I have around I what Let me check how many days I got a buying opportunity. I got a buying opportunity of 1592 days. 1592 days I had a buying opportunity. Does it mean all the buy was successful? No, it doesn't mean, right? Let us find out one more thing. How much extra high, extra point it moved, right? That means what I want to see is, I want to see previous so only whenever I got a buy, right? Whenever I got a buy, if you are able to understand, otherwise just follow the strategy. I'm just going to show you how I came to the conclusion, right? So whenever I got a buy, I just filtered the buy details. Whenever I got a buy, what I did was I just took I wanted to see how many extra points it made after my buy, right? So here, what happened? I want to see the high minus what is the buying price we are telling? Previous day's high plus 10 rupees, right? This is what we said. So only 4 rupees on 7, only 4 rupees extra it went. Does it make any sense? No, right? That day the stop loss would have been triggered, right? And you on 6th you can see there was a buy signal, but and we got a 77 rupees. But we cannot confirm whether it happened or not. We need to go and check in the chart what happened. Sometime the buy would have been triggered. I'll show you. Sometime your chart will be something like this. Previous day you had like this, and next day the market opened. I will change the color. Let's say next day the market opened and it went, right? It broke the high, and after breaking the high, it would have come down and triggered stop loss. Then it would have went up. So here it will show it made extra point, but meanwhile our stop loss would have been triggered. That we need to check in our graph. I will show you that also, right? But I'm just to understand how many points it's making high. So if you what we can do is, when you take all these points, the average, if you see, around 67 points average it's coming. That means on an average 60 rupees and above it's going. That's why we kept a 60 rupees target, right? And 60 rupees target. So 1:1 risk to reward ratio I have to maintain. So 30 rupees stop loss, right? 1500 risk and 3000 rupees target. That's why I came to this conclusion, right? Now, this is only on the buy side. Now, let me see what happened to on the sell signal, right? On the sell side, if sell is it triggered, we need to find out, right? So, sell based on previous days, if the low of today is lesser than previous day's low minus 10, right? Minus 10. If the condition is true, then I want to get me a sell message. If not, I want to get a no sell message. Clear? So on 6th, 7th, it was no sell. And let me put up to 2011 the same equation. So I got a lot of sell, lot of no sells, all these messages, right? Now, the same kind of calculation, we can do it here also. As I mentioned, if you are not able to follow the calculation, just forget about it. People who are able to follow, just follow the data analysis, right? So here again, what I am going to do the analysis is, see, I want to get how many points extra we are getting, right? After selling, how many points we are getting on an average. That for that, what I need to do is, I need to get previous day's low minus this today's low minus 10 rupees, what my exit price, right? So 40 rupees is what on 6th it's showing. Let us see all other day how it is. You can see each day what kind of this one, right? So here on an average 93 rupees what is showing. But since on buy side we saw some 69 rupees, we are rounding it at a 60 rupees target, right? So 60 rupees is what is a very decent amount of movement which we can capture from Nifty, and 30 rupees is our stop loss, right? And this is only applicable when the conditions are met, right? Now, I have done the analysis with the same, this one, I have done an analysis, right? Each day, what happened? Let me show you at least on March 7th, 6th, 5th, and on how it happens, right? I have all the data here. Meanwhile, I will open a graph. Then I will show you how it happens in the month of March. Couple of days, right? Later you can do it in from your system. So I'm going to open a chart here, right? I think I will share my screen first. Okay, so you can see the AngelOne account, and AngelOne has got a wonderful chart. Okay, charting software. I don't know how many of you are using a trading view. In better than trading view, now they have upgraded the charting software, and it's better than trading view. You get all indicators, you get all features, you get all data. Wonderful charting software there, right? And if you wish to open an account with AngelOne, I will be mentioning the link in the description. So click on the link and register to open an account with AngelOne, right? You will get a benefit that 20 rupees flat brokerage per order, and other software, everything will be free, right? Yeah. Now, and also you will be getting an advisory service from my team, right? All this you will be getting if you're opening an account through us in AngelOne. Now, according to our data, we had, let me just one more time open the Excel and remember the dates. Okay, this is only on March data, right? So March 7th, we had what? We had a buy, right? Let me check what happened on March 7th, we had a buy. March 6th, we had a buy and sell both, right? Both we will check now, right? Now, if you open the chart, so March, we said March 7th, we had a buying opportunity, right? Now, if you really see what I said, the trade starts working from 9:20, not 9:50. So this is March 7th data. So March 7th, if you see the first 5-minute candle, which is 9:15 to 9:20 candle, actually created the high. That means this we are not considering at all. We are considering from 9:15 onwards. So the trade is actually not valid, right? So March 7th trade is not valid. Only if it would have actually gone up. For example, if it would have been for somewhere here, if it would have been gone up, it would have been broken the previous day high. Previous day high was somewhere here. It would have been broken previous day's high with another 10 rupee high. Then we could have considered it as actually a trading opportunity. But there was no trade happens. If trade would have been happened, it would have been triggered a stop loss, right? And here the 10 rupee difference not happened, trade not difference not happened. But here it happened. Since it's a 9:20 candle, we are ignoring, right? Now let me check. On 6th, as we mentioned that we had a buy and sell both the signals, right? So first let us understand on 5th, what was the high? 5th high was here, right? So if you see 5th high was broken here, right? With a 10 rupee, this one, it broke. 5th high was around 22,514 was the high. Now 22,524 if it happens. Yeah, it happens here. You can see the high. Look at to this side so that you will understand. When I keep it in on this one, you can see that the high was broken, right? With the extra 10 rupee. That means the trade is valid, buy trade has happened. And immediately straight away it went up, right? It created more than 60 rupees upside movement. So it was a target got achieved on that day. But the same day we had a sell signal also. Let me see what happened to the sell signal. Sell, the low was around this candle low, which was 22,352, right? This was the low. And if you see, the low was broken, even you got low minus 10 was successful, and the sell signal was generated, right? But soon after the sell signal, what happened? It reversed and slightly again came down. It would have been, the stop loss would have been triggered somewhere here in this candle, right? And again came down, again went up. So here what happened? The stop loss is triggered. So the sell signal didn't work, but the buy signal worked. So 1,500 rupees we lost here, 3,000 we gained here, right? Now on 5th, did we have any opportunity? Let me check. 5th, we didn't have any opportunity. For example, 5th, this was the 5th trade. 5th, if you see on 4, sorry, we had an opportunity on 5th also, I believe. Yes, 5th is a trade where we had a sell, right? We had a sell. See previous day, which was 4. The low was somewhere here, right? Somewhere here, which is around this candle low, which is 22,466. This was the low, and on 920 candle we got that breakout, and it came down, right? So 915 we don't have to consider, because 915 we don't consider for our trading. 920 onwards we will consider. So this candle created a low and broke the low, so we got this one, and then it actually came down, right? And see on 2nd March, if you see on 4th March, we didn't get any signal because it was within the range, so there is no signal. And 2nd March, we will not trade because it was only half day trading. It was a Saturday, right? On 1st March, let us see. 1st March, what happened? On 29th February, the market high was somewhere at 22,028, but the candle opened with the upside gap. You see, this price has actually opened with the upside gap. So that day, no trade valid, right? This is how we need to do the analysis. So I have done 100 trades analysis, right? See, normally when we say, whenever we want to find out the quality of any analysis or any technical analyst and all, we normally see the latest 100 trades details, right? So let me show you 100 trades, last 100 trades details, 100 days trades, for example. So yeah. So I have all data, I have done all this analysis. You can see which are the from October, November, December, January, February, March we are running it, right? And we have previous data also, but to show you manual analysis, we have done this. Now let me take an MIS. So February month, what happened? So here only thing I have not considered the cost. Even if you take a cost, you know, hardly 63 or 65 rupees is what it costs you per day, including your brokerage and the statutory cost if you are running through a 20 rupees brokerage, right? And on an average, 10 trades what's happening in a month, because if you see number of trading days here, you can see 21, right? You see 104 days analysis I have done. Only for 55 days it traded, right? Balance days there was no trade happen. It didn't meet the criteria. So you can see only 50%, right? So that means average 10 days trades what's happening in a month. So around 650 rupees what monthly you may be spending for your charges. So in this MIS, I have not included the cost. That's what I want to say here. So the capital is 2.5 lakh. In the month of February, you can see all this data with that 7,500 what we generated from this, which is around 3% of your capital. And you can see here maximum profit in a day, maximum loss in a day and all, and return investment, number of profitable day, number of loss in day. So 50/50 is the strike rate which we got it. Then when total number of trading days, strike, all these things. And in the month of January, you see we made around 4,500 rupees net profit, right? Which is around again close to 1%, 1.5% kind of return. Then in the month of December, it generated around 7,500 again. But November, you see, it made a loss of 1,500, which is hardly near to 0.8% negative return, right? And October, we made very good return, which is around 10,000 rupees return, around 4% kind of return generated. Overall, from October, November, December, January, February, if you see all these, all these 5 months, it generated around 11% return, right? With a kind of you see 55 days it traded. Total we did an analysis of 104 days analysis, right? So this is one strategy which everyone can use it, right? Only thing, strictly follow the rule. Strictly follow the rule. Never mix your emotions. Make sure you just whenever the stop loss comes, let it trigger and close the position. And similar way, follow all the rules. If it open upside gap or downside gap, we need to avoid the trading. Half day, we need to avoid the trading. If you clearly follow, strictly follow these strategies, no? You will average what I'm seeing historically around a 3% kind of return we can generate. As I mentioned in the beginning, disclaimer I want to give, these are not guaranteed one, but past performance is showing that, right? See, this is the key to success in stock market trading is disciplinary action, right? Consistent disciplinary action is what a key to success in stock market trading, right? So you should not get disappointed. Okay, I was looking for a 40% strike rate, and if you see consistently 1 week I was making loss, so you should not stop that. You should continue. You should see the 1 month. If 1 month is a loss, see 2 months, 3 months, see how it is, right? And we kept already that maximum loss in this business, in this strategy is what 20% of your capital, which is 50,000. Any time if the 2.5 lakh became 2 lakh, that moment you stop the strategy. You don't have to run it, right? So that's how this has to manage it, right? Friends, that's all in this video. So before winding up, I want to invite all you to my master classes. We have scheduled 5 master classes coming weeks. Monday to Friday, we have free master classes, online master classes. So the link to register for the master class is there in the description. Also, you can visit my website, yodha.net, yodha.net. In that, you can register and attend the master classes. You will learn a lot of things in your life. And also, if you want to automate your trading, you can actually come to my company called AngelOne. Visit my website, algover.com. In that, you can register. And we have 8 strategies, ready-made strategies available, which is proven and which was running quite a long time in the market. And that strategy is available for you. So you can subscribe and use any strategies you want, right? Also, we can help you to automate your trading strategy in case you have a proven strategies, which is consistently giving you some return. And if you want to automate it, we can help you. For that, it will be an additional charges, right? So that's all in this video, friends. Thank you very much for watching. Wishing you all a very happy and successful trading.